Hi guys, this is Accounting 1, Chapter 14.1, Payroll, Accounting, Taxes, and Reports. Quick review, last chapter we discussed calculating employee total earnings, calculating payroll taxes, withholding certificates, preparing payroll records, and preparing payroll checks. In this section, we're going to discuss how to record your payroll checks. It's important to note the payroll journal entry is based on the total earnings column, each deduction column, and the new pay column. You will not use the total earnings regular, earnings overtime, or deductions total columns when journalizing in this chapter. Okay guys, I'm going to do the example that they have in the book on page 332 and 333. We're going to talk about analyzing the payment of a payroll. We're actually going to use T accounts right behind me. So what you're going to do is you look at your payroll register. It's right there at the top of 332. Hopefully you can see that. Okay. And so you're going to use the totals. It's not the individual person. So you'll add up, when you're doing this on your own, you're going to add up all of the people together to get your total earnings. So the salary expense is your total earnings, and you need to debit that because you're going to pay that out. And when you have a debit, you always need a credit. So if you come over here, it looks like when you look at their payroll register after their earnings, their federal income tax is going to be $273. Make sure that you are putting the date on your T account so that way we know which payroll you're talking about specifically. You see I have it here December 15th, then the total amount. Again, when I'm crediting the tax account, December 15th, $273. Social Security total, December 15th, $247.26. December 15th, $57.07. Your health insurance, December 15th, $182.40. And then there's a few other accounts that I haven't put up, but that's the U.S. Savings Bond payable. So you will go over to your other, and you see the B in there at the very tiny. You'll have to look really close, and it says small 35. That is your United States Savings Bond payable. So that is where they get the $35. And then you will also see that there's a UW total for $20. That is your United Way donations payable that you also have to account for. Again, that'll go in your credit account column. And then you also have your net pay, which is going to be called cash on your T account. And it is $2,989.02. Okay. So remember that your cash is your net pay. Now it's not technically given to you, but we can calculate it and figure it out. So we have our cash T account. It looks employee income, Medicare, I'm going to put Medi, and salary expense. Ooh, I also forgot Social Security, so I'll put SS tax over here, okay? So the book gives us federal income tax withheld. So you're going to go to your employee income tax payable, and you're going to take your federal income tax withheld of $13.86 and put it on your credit side. So $13.86. Social Security tax payable, they tell you that in here it's withheld of $819. So again, $819 on your credit side because it's going to be paid into those accounts. Medicare tax payable is the Medicare tax withheld in the book. So you're going to credit $189. And then it also tells you your total earnings. Again, your total earnings and your T account is going to be called salary expense. Since we have all these credits, we need to account for your debit. This is where the debit side is going to happen. So $12,600. So your cash equals your net pay. Your salaries expense is also known as your total earnings. So your total earnings minus your employee income, minus your Social Security tax, and minus your Medicare tax will equal your cash. So I'll give you a second to figure that out. So you'll take $12,600 minus $13.86 minus $819 minus $189. And your cash will be on your credit side for $10,206. And that is how you do the first part of. Hi guys, so the second half of Work Together is going to ask you to journalize the payment of Metro's July 1st through 15th payroll. It's on page 15. I kind of did a rough draft of what it looks like. You can follow along on your actual worksheet. The payroll was paid by check number 455 on July 15th of this current year. So don't forget, up at the top, it's going to ask you for the page number. You'll put that in. So the first thing you're going to do is debit your account. And what we know from your T counts is that your salary expense is your debit. So very first thing you always do is the date. So July 15th. Your account title is going to be what your T account says, salary expense. They told you the doc number was check number 455. So C455. And you're going to debit in the general for $12,600. Now, you also have a cash T account, so you need to account for that as well. You'll go over to your cash side, and since your T account tells you that it is on your credit side, you're going to credit for $10,206. See that all the way over here? Okay. You also need to make sure that you're putting your employee income tax payable, your Social Security tax payable, and your Medicare payable in. So we're going to do employee income tax payable first. So account title, it's all on July 15th, so you don't need to restate the date. Go over here, put that number in of 1386. Social Security, tax payable. Again, since it's on the credit on your T account, it's the credit in your journal of $819. And then Medicare tax. Of $189. Make sure that your credits, all your credits, equal your debit. And that is how you do work together. That's exactly how you're gonna do on your own. So, good luck. Make sure that if you have questions, get a hold of me through Google Classroom. You guys have my phone number. You can call, text, FaceTime, whatever works. If you need me to help you with a problem, if you wanna just spot check it, let me know. I'll make sure you're on the right track. Again, all these assignments are gonna be due Tuesday, April 7th at 11:59 p.m. Good luck.